While government spending has been sustained. As we highlighted throughout last year, commodity export prices have receded sharply from the highs reached in 2022, reducing the contribution of foreign demand to growth. For 2023 as a whole, GDP growth is revised down slightly to 0.6% from the November figure of 0.8%. Our GDP growth forecast for 2024 and 2025 is unchanged from the previous meeting at 1.2% and 1.3% respectively. At present, we assess the risks to the medium-term domestic growth outlook to be balanced. With the weaker GDP outcome in 2023, our current growth forecast leaves the output gap marginally negative and at zero in the outer years of the forecast. Compared to many other emerging and advanced economies, the rise in South Africa's headline inflation rate was more gradual and peaked lower. However, the return to target has been slow. The inflation rate remains sensitive to changes to both global and domestic supply and demand. Due to global factors, oil prices remain generally high at around $82 per barrel. We expect them, however, to be somewhat lower this year and next compared to the November forecast. Commodity export prices fell sharply last year by about 27% and are expected to fall by a further 12% this year. As a result, and despite modest economic growth, South Africa's external financing needs will increase as the current account deficit expands. We expect a deficit of 1.4% of GDP in 2023, rising to 2.8% of GDP in 2024 and 3.6% of GDP in 2025. The uncertainties of the global environment and various South Africa-specific factors, including sluggish growth and dependence on commodity export prices, continue to weigh on the value of the currency. The rand depreciated over the past year by about 11% against the US dollar, making it one of the worst performing emerging market currencies. The implied starting point for the rand forecast is 18.65 to the US dollar compared to 18.69 at the time of the previous meeting. Fuel price inflation is expected to be low, averaging below 1% in 2024. Food price inflation is revised slightly higher for 2024 to 5.7%, but remains broadly unchanged over the forecast period. Core inflation was 4.9% in 2023. The core inflation forecast for 2024 and 2025 is little changed at 4.6% and 4.5% in 2026. Services inflation in 2023 was 4.2%. The forecast for 2024 services price inflation remains unchanged at 4.8%. Core goods inflation was 6.1% in 2023 and is forecast to ease to 4.5% this year. While average salaries grew less than expected in the latter half of 2023, they are forecast to hit long-term averages for the rest of the forecast period. Headline inflation was 6% in 2023. With few significant changes to the forecast for underlying components, headline inflation is expected to ease to 5% for 2024, to 4.6% in 2025, and to 4.5% in 2026. While our baseline inflation forecast is of continued gradual moderation in global and domestic inflation, the risks to the outlook are still assessed to the upside. Better than expected global growth last year and ongoing geopolitical tensions this year serve to keep oil markets tight. Despite some improvements, advanced economies continue to experience strong wage growth and elevated core inflation. South Africa's imported goods inflation increased strongly last year, and despite some better recent outcomes, remains sensitive to currency weakness. Recent increases in egg and potato prices remind us that domestic food price inflation remains unpredictable and high. Electricity prices and logistics constraints continue to present clear inflation risks. With fuel and food price inflation remaining volatile, risk still attaches to the forecast for average salaries. Housing and services prices, more broadly and in contrast, may continue to provide some downside relief to the inflation risk profile. Sticky inflation in G3 economies implies that their average policy rates will remain elevated at about 4.3% in 2024 compared to 1.1% average seen in 2022. These tighter global financial conditions raise the risk profile of economies needing foreign capital. South Africa's long-term cost of borrowing is expected to remain, and despite moderating inflation, long-term bond yields currently trade around 12%. The rise in inflation in 2022 generally resulted in higher inflation expectations across markets, businesses, and households in 2023. Medium and longer-term market expectations for inflation remain elevated. The December survey of the Bureau for Economic Research shows average inflation expectations increased to 5.9% for 2024. Achieving permanently lower inflation and interest rates requires inflation expectations to be closely anchored to the midpoint of the target band. Against this backdrop, the MPC decided to keep the repurchase rate at its current level of 8.25% per year. The decision was unanimous. At the current repurchase rate level, policy is restrictive, consistent with the inflation outlook and the need to address rising inflation expectations. Serious upside risks to the inflation trajectory from global and domestic sources are evident, and as noted earlier, the economic outlook is highly uncertain. The inflation and repo rate projections from the updated QPM remain a broad policy guide, changing from meeting to meeting in response to new data. Future committee decisions will be data dependent and sensitive to the balance of risks to the outlook. Guiding inflation expectations back towards the midpoint of the target band will improve the economic outlook and reduce borrowing costs. Since early 2020, the committee has recommended additional means of strengthening economic conditions, including achieving a prudent public debt level, increasing the supply of energy, keeping administered price inflation low, and real wage growth in line with productivity gains. Such steps would also strengthen monetary policy effectiveness and its transmission to the broader economy. This concludes our statement, and at this point, I would invite you to pose questions, and I will address those questions or refer them to the members of the committee.
Afternoon, Governor and Deputy Governors. It's Kopano Gumbi from Reuters. A few questions for everyone. First, do you believe that inflation will still be the dominant theme or trend for this year, and that higher for longer remains the message that the Reserve Bank is trying to communicate to the market? This is almost redundant, but I have to ask it anyway. Is the cutting cycle on the horizon yet, or are the upside risks you've mentioned outweighing the possibility of a cutting cycle in this first half or second half of the year? And then thirdly, Stats SA data up to Q3 at least shows us that the economy has been hovering around 0% growth this last year. Households are in a recession, to quote Stats SA, following 2 consecutive quarters of negative growth from the consumption expenditure side. Disposable incomes have also contracted a bit. Inflation is now steadily falling, and as you say, your output gap is now negative. So given those scenarios, why not cut rates? Thank you.
Kopano, you seem to be the press conference today.
Greetings, it's Balesa Mufukeng from CNBC Africa. Governor, given all the risk factors that you outlined, in your view, what factors would you say are most likely to count the most in determining not only the depth, but also the pace of the rate cutting cycle? Thanks.
Okay, I will link your question to Kopano's second question, which asked, is the cutting cycle on the horizon yet? And you asked, what are the factors that will influence the rate cutting cycle? We are an inflation targeter, a flexible one. Inflation rose and rose above our target band. It started to decline, but it was very slow. Then it eventually declined to 5.4. Then it declined all the way to 4.7. Then it picked up from 4.7 to 4.8, back to 5.4, and rose to 5.9. It had since receded from the 5.9 to the 5.5, and the most recent figure of 5.1. I'm quoting these numbers to say to you, there isn't a discernible trend that shows that inflation is declining towards our target. And so, for as long as there isn't any sustained decline of inflation towards our target, and more importantly, that inflation stays there in a sustained manner, don't expect us to recalibrate policy. And you wanted to know about these other factors. All of those factors, they just tell us about the risk. Focus on what is the anchor of policy. The anchor of policy is inflation. And it's only when we are convinced that inflation has declined to target and is sustained there that it would become necessary to recalibrate policy. And so Kopano says that The household sector is weak. Personal income taxes, personal disposable income is weak. The output gap is negative. And I agree with you. Household consumption is weak. Personal disposable income is weak. And all of those things, we are talking to them in real terms, which means adjusted for inflation. So inflation is eating people's disposable income and thus constraining their ability to spend. And if people are to have the income that they would spend in the future, you have got to be able to, you have got to rein in inflation. Failure to rein in inflation, you are eroding the purchasing power of all of those. The output gap, if you look at the statement, we said is marginally negative. Really, it's negative 0.1. It's a rounding of error. For all intents and purposes, over the forecast period, the output gap does not exist. And when the output gap does not exist, it tells us that there aren't either pressures that are demand pressures that are putting the inflation up or pushing it down. So it's there. But bear in mind, and people say this thing, the output gap is a non-observed variable. It is an imputed variable. We'll calculate that from the potential growth compared to the actual growth. That is how we arrive at the output gap. You ask the question, is inflation a dominant factor this year and thus higher for longer? Well, we could put it differently. What is foremost in the minds of the public? It's been the high cost of living. And across the world, you had seen that inflation rose and thus increased the cost of living. And in a survey that was run by one of the major global survey companies, which also covered South Africa, by the way, found a public that is highly intolerant of the high cost of living and of inflation. And that is the story that you find even in the advanced economies today. And hence you will find that even in advanced economies, the talk is the rates will remain high for longer until you are able to convince the public by demonstrating that inflation has been reined in towards the target and is actually sustained there for a period of time. And that is what will then lead to central banks revisiting their thing. So sometimes people ask, when will this thing be? And your question is the cutting cycle on the horizon? And it's very cleverly put, because you see horizon, you'll be asking, is it 1 quarter, 2 quarters, 3 quarters? And the answer is a very straightforward one. The cutting has got nothing to do with the time. It has to do with the state. So we are not time dependent, we are state dependent. And so what this actually means is we will be watching the key variables being the inflation outlook, the growth outlook, the risks attendant to that, the likelihood of those risks materializing or not materializing, and if we believe the risks are materializing, we will recalibrate policy appropriately. You have a mic.
Good afternoon. I wanted to wait because it's not related to today, but 2 questions to the
Your
SARB.
name?
It's Dogozo Kumalo from Newsroom Africa. So 2 questions. One, just the response to ANC in KZN saying that they will march to the Reserve Bank, obviously in relation to high interest rates, the inflation versus high interest rates. And then South Africans were waiting for this announcement, West Bank being a big story around the overcharging of interest rates. Does the Reserve Bank have anything to say in that regard? I know Financial Investigator was planning to write to the SOB on that issue. And then if perhaps Mr. David Fawkes could just introduce himself to the nation, please. Thank you.
I introduced him.
Well, a little bit more in-depth from him. Thank you.
I introduced him, and we will circulate his bio so that you know who he is. Okay. Yes, ma'am.
It's Monique from Bloomberg. I wanted to know, did all 5 MPC members vote in today's decision for it to be on hold, or was it just 4?
Come again?
Was the decision made by 5 MPC members today, or was it 4?
Okay.
Good afternoon, Governor and the panel members. My name is Ntando Tsukwana from Bloomberg News. My question is around the tensions in the Middle East, as well as the tensions in the Red Sea region, and whether how concerned you are about those tensions that have triggered supply chain constraints, how worried you are in terms of them interrupting your efforts in slowing down inflation, and is that in part helping to keep you hesitant about relaxing monetary policy?
We can take another one. Anybody online?
You've responded, Governor, to the questions that we have online.
Okay, thank you. Ntokozo, you're right. I will deal with your questions once we are done with the business of the MPC. Monique, so it is said, David Fawkes joined the MPC. He attended his first MPC this week. So he was a full participant this week. He was appointed with effect from the 11th of January. And so there were 5 people. So when we say it was unanimous, it was not unanimous of 4 minus 1, excluding the 1. It was the unanimous of 5. Okay. And Ntokozo, very important question you're raising about the tensions, he said, in the Middle East. And you would have heard, we talked about geopolitical tensions. And it was not just the Middle East, it was also Russia-Ukraine situation. But the tensions in the Middle East and the impact on the global supply chains, the figures might have changed, but the last time I had checked, for the period of the first 2 weeks of January, something around that, last year there were just over 200 vessels that were going through the Red Sea. For the same period this year, there were just over 100. So that tells you that either the shipping lines are using alternative routes, or they had decided to reduce because of either increased costs of security and so forth. And if they cannot use that, the alternative going to Europe is to actually go round the Cape, which I suppose was exactly the reason why the Portuguese explorers decided to find the route around the Cape. So the problems in the Red Sea are centuries old, which is what led Portuguese explorers to find a route around the Cape. No doubt, if they affect the global supply chains, as we had seen from the initial figures, those costs might have to be passed. And if they are passed on to the producers will eventually pass them to the consumers, and you'll expect that inflation would actually be going up. But that is the tensions there. There is another problem which has to do with the Panama Canal, which has got nothing to do with a war. It just had to do with the water levels in the Panama Canal, which has also raised the constraints with respect to shipping that goes through that canal. So when we referred to the geopolitical tensions impacting on supply chains, we were taking account of these tensions that we have seen. Yeah, that deals with your questions. That I dealt with all the questions. Any other MPC questions?
We have 2 questions online. They relate to the MPC membership. One is from Atol Dlamini from Alliance News. He asks, how has the MPC handled the resignation of Deputy Governor Kuben Naidu? The second question is from Claire Bisseka from Financial Mail. How many members of the MPC do you consider optimal? What progress are you making in increasing the size of the MPC? Those are all the questions for now. Thank you, Governor.
Okay, we will close it at that. How is the MPC handling the issue of DG Naidu? Well, DG Naidu is on garden leave. The appointing authority is the presidency, and we are told that the president is applying his mind, and once his mind has been applied, he will tell us who he is replacing DG Naidu with. The size of the MPC, the terms of reference of the MPC says that we can include up to 4 staff members, up to 4 staff members of the Reserve Bank in the MPC. It always makes sense to have an odd number so that the governor does not have to exercise 2 votes, and the governor can only exercise 1 vote like everybody else. And so the more the better. The maximum number thus is 8, and we can go to 7. So at the moment we are 5. If the president makes or when the president, not if, when the president makes an appointment of a deputy governor, we will go to 6, and we will continue to search like we have been doing for another person to take it to 7, but 6 is definitely better than 5. And I think that in November, many of you were asking the questions. You were worried that we will have been reduced to 4. Well, we are back to 5. 5 is better than 4, and so that is what we face. And also, ANC KZN marched to the Reserve Bank about interest rates. I guess when they march here, we will receive the memorandum. We do not know what is in their memorandum, so we can't respond to something we haven't seen. Suffice to say that interest rates are a response to high inflation. And if inflation declines, we can always have lower interest rates. West Bank is a subsidiary of an entity we supervise. We do not comment on anything that has to do with the individual supervised financial institutions. If that financial investigator writes to us, we will deal with that. But given that that investigator is not a part of the regulated entities, we can only respond to the regulated entity. And lastly, to the extent that there are any malpractices in that institution, they are a market conduct issue. And if it's a market conduct issue, correctly, it should be dealt with by the Financial Sector Conduct Authority. But I've got no doubt that if you were to ask that question to the Financial Sector Conduct Authority, they will say to you, we will not comment on individual financial institutions. Well, I don't know. I'm getting intimidated by two hands at the back.
Alistair Ball from Bloomberg. Thanks for taking the question, Governor. Can I just come back to the point you made about no discernible trend on getting to the midpoint of your target? I mean, you have had 2 back-to-back months of pretty good inflation numbers, and core's been 4.5% in both months. How much more evidence do you need to see to feel confident, given you've got to balance the risk of staying tight for too long? I mean, you are also highlighting sort of challenges that South African consumers are facing, and you don't want to make a policy error. Thank you.
Kopano?
I don't know if this is something you'll answer, but I have to ask anyway. On the matter of the deputy governors, what, if you can share, what is the criteria that the bank would be looking for in a new deputy governor? And how would the process work going forward? We know the president appoints them, but do you as governor recommend the strongest candidates, which the presidency then ratifies? And are you working in collaboration with National Treasury on this? Or if you could give us any more details on the appointment of a deputy governor. Thank you.
Okay, and that is Pelile. Alistair, you said there were 2 months where we were close to target. That was last year, July and August. We were 4.7 and 4.8. Unfortunately, it was in the middle of winter. If it was in September, I would have said to you, 2 swallows do not mean that summer has arrived. But those 2 swallows arrived in the middle of winter, and very clearly it was not summer, because the inflation rate then started to go up. When those figures came out, we welcomed them, because we thought that means that we had turned the corner. But we said that there are risks on the horizon. And we were right, because inflation started creeping up again. It gave us a scare. It reached 5.9. And by the way, we expected this year that inflation would be 5.8. And getting into this meeting, we thought it would be 5.9. Average for last year, it has come out at 6% on the dot. So there isn't a discernible trend that inflation is declining to the midpoint of our inflation target range. We had a good print this week. It came out at 5.1. And we just hope that momentum gets sustained and we get to the 4.5 and stay there sustainably, so that we can be confident to recalibrate policy. Kopano, the requirements for a deputy governor in the Act are actually fairly simple. It says that there must be somebody with tested banking experience and that. But over the years, we had also broadened and looked at people who have got broad policy experience. But we are not the appointing authority. The president is the appointing authority. What the Act says, and you asked, are we in conversation with the Treasury? What the Act says is that the president shall appoint the governor and deputy governors after consultation with the Minister of Finance and the board of the Reserve Bank. Not the governor of the Reserve Bank, the board of the Reserve Bank. Because remember, the section talks about the appointment of the governor and deputy governors. So you can't talk to the governor about the governor's own appointment, right? So they will consult the board, and those consultations take place, and you engage with the presidency and with the Minister of Finance. The president makes this consultation. It's very important, because South African jurisprudence have made a determination of this. It's not an appointment of the president in consultation with the Minister of Finance and in the Reserve Bank. If it was in consultation, that would mean that the president needs the agreement of the Minister of Finance and the governor, and the board of the South African Reserve Bank. But it says after consultation, which means that the president can talk to the Minister of Finance, talk to the board of the Reserve Bank, and say, thank you very much, I have heard you, here is my decision. And the deputy governors, it becomes a very important point that I must make. Because sometimes they thought that the deputy governors, at the end of this press conference, they go back to their office and start reading about what to do at the next MPC. It is not. Deputy governors are executives of the bank. There is a lot to run in the bank. And so you would know that Deputy Governor Chasivana is not just a deputy governor, she's also the CEO of the Prudential Authority, which means that she has got to look at the regulation of the sector. Deputy Governor Kasim is responsible for financial markets and international work. And once again, these are massive responsibilities, and that involves the advancement of South Africa's positions in international positions, and it includes the execution of monetary policy. Deputy Governor Naidu was responsible for financial stability, which is very important, including the resolution of failed financial institutions. He was responsible for the national payment systems. He was responsible for economic statistics. He was responsible for the fintech unit and the innovation. He was responsible for risk management. He was responsible for the currency producing subsidiaries of the Reserve Bank, which means that he had responsibility to make sure that banknotes are printed and are available, that coins are minted and are available. So that is the bulk of the responsibilities. And once he is done with all of those, every 8 weeks or so, he will come here and join us on the panel and say what had actually happened with rates. So it's very important to understand that deputy governors are not just economists here. They are executives. And that is what we actually face. So thank you very much. That concludes the proceedings of today. We shall see you in March. Just remember that in March, the announcement will be on a Wednesday because of the Easter long weekend. And so we will see you then. So don't make a mistake and think that you will come here on the Thursday. You will be stuck in the traffic to Moria. So we will see you in March. Thank you.